What's up everybody? Gen X Dividend Investor here. In this interesting video I hope to motivate you to invest by showing you what small amounts of money can do for your retirement over the long run, even if you're starting late in life. So if that sounds interesting to you, then please show your support by hitting the thumbs up button, subscribing if you haven't yet, and clicking that bell notification. And as a quick sidebar for you dividend lovers out there, take a look at this tweet I just posted this morning on Friday, August 25th. I wrote, Realty Income announces agreement to acquire an interest in the Bellagio, an iconic high-quality property in Las Vegas, and which represents O's second investment in the gaming industry. O is my wife's favorite stock we own, and it's a property we love visiting. So that tweet's an example of useful, real-time dividend info that I post on Twitter, something I frequently do. Like yesterday I posted that Altria announced a 4.3% dividend hike, taking their dividends from 94 cents per share per quarter up to 98 cents. And I said that people voted well, because a few weeks earlier I put up a fun poll asking my followers to guess how much MO was going to increase it this year, and over 50% of the respondents correctly guessed that they would increase it between 2.5% to 5%. So I recommend you follow me at Gen X Dividend on Twitter, aka X, for real-time and valuable dividend-related information. Anyways, I think it's cool to think that I'm an owner in one of the most beautiful properties in Las Vegas. As a kid, I never really understood that if you owned a stock, you basically became an owner in a company. I also didn't realize that smart, rich people focus on investing their money into quality assets, rather than just having huge bank accounts. I mean, I'd always heard that you gotta save, rather than invest. And the only investors I knew of did real estate, but those people also constantly complained about their renters, regulations, taxes, loans, maintenance, etc. So as a kid I was really turned off to real estate, though as an adult I came to appreciate it. But bottom line, I prefer owning quality dividend stocks over anything else, and that's why today the majority of my net worth is in relatively conservative blue-chip dividend stocks. Most young people unfortunately never get exposed to good investing practices or general financial literacy, and many put off actively planning for retirement until late in life. Fortunately, it's never too late to invest, and it doesn't take a lot of investment to improve your financial futures. Like some brokers let you buy fractional shares of stock, so you could buy $10 of Nike or Costco or whatever, which might not seem like a lot, and it's not, but if you keep buying $10 here, $20 there, and you do that for decades, it'll most likely compound into material amounts of wealth. The average person can do well if they simply spend less than they earn, and invest a little bit of money into decent things over long periods of time. Speaking of averages, I saw an article by the US Census Bureau which said that the median household retirement income in the US is about $47,000 a year, with Social Security accounting for most of it. So that means that half the retired households in the US are getting by on less than $47,000 a year, and half are making more than that. I also found that the average Social Security benefit in 2023 is about $1,790 a month, or about $21,000 a year. These days most people work, and most people end up getting married, so for the households that have 2 retired workers in them, then they might be getting $42,000 a year just from Social Security. So for this video I put together this spreadsheet of different retirement scenarios, based on different ages of folks and different levels of investments over time. The first 3 rows are for people who just turned 21, the next 3 rows are for 30-year-olds, and the last 3 rows are for 40-year-olds. I picked those ages due to this data from my YouTube channel. We see that the majority of my views come from people that are 25 to 34 years old, followed closely by people that are 35 to 44, and then 45 to 54. I created my Gen X Google account in July of 2019, which is why this YouTube admin tool shows that the lifetime of my account is from July 7th, 2019 until today in August of 2023. That being said, I actually posted my first video in August of 2019. Anyways, I figured that estimating retirement scenarios for those age ranges would be useful to my viewers. I used my Dividend Spreadsheet product to model some of this data using a tool I created called a Portfolio Growth Simulator. I assumed that everyone was starting from scratch with $0 invested, and they built portfolios that had a 3% average weighted starting yield, which means relatively conservative stocks for a dividend portfolio. Then I also assumed a 7% dividend CAGR and a 7% annual share price increase. When I say average weighted yield, I just mean that if you look at the starting yield of each stock in the portfolio, and you weigh how much of each stock that you have, then the average yield overall is 3%. I also assumed the retirement age was 67 in these estimates, and that people were reinvesting their dividends. So a 21-year-old who invested $25 a week until retirement would end with a portfolio worth $1.1 million that would be dripping almost $30,000 a year. And if we assumed a 3% inflation rate, then the buying power of those amounts would all be cut to 1/4 or so. So like $1.1 million in 46 years would be like $250,000 now. And since I was modeling what an average retiree in the US looks like, and since most retirees have Social Security, I also listed Social Security as another stream of the retirement income, but I lowered the expected payout by 30% because most estimates showed that benefit payouts will be cut anywhere from 5% to 20%, so I went more conservative and used 30%. What some people don't understand is that even if Social Security coffers run empty, and it's currently estimated to happen within the next 15 or so years, it simply means that ongoing payouts get reduced since money is constantly flowing in from payroll taxes. Like, think of Social Security being a sink full of money, with payroll taxes pouring out of the faucet and into the sink, trying to fill it up, but the drain in the bottom, which is benefits getting paid out, is constantly emptying the sink. Right now the sink has water in it, and is constantly getting more water from payroll taxes, but the problem is that the drain is emptying the sink faster than the money is pouring in. So once the sink is empty, which will probably happen in a decade or two, then it doesn't mean benefits stop getting paid, it just means less benefits will be paid since money from payroll taxes keep flowing in. And of course, a variety of changes could happen that could cause the sink to fill up faster, or slower, or the amount of the drain could be made smaller, or whatever. That being said, Social Security has been around for almost 90 years, so I don't see it going away in my lifetime. Now, I wouldn't live your life under the assumption that Social Security will be your main retirement source of income, but instead try to think of it as gravy. I know that's easier said than done, but if you're watching videos like this, then I'm confident you'll at least be better off than the average person. Anyways, if we take the median Social Security payout of today and cut it by 30%, then we end at an average annual Social Security payout of $15 grand. Remember, Social Security gets changed by an annual cost of living adjustment, so the buying power of $15 grand of Social Security today would be like whatever the inflated $15 grand of Social Security is in the future, aside from any changes that might happen. I'd guess that Social Security in 46 years would probably be 4x of what it pays out today from a dollar perspective, thus I could have quadrupled my Social Security payouts in this spreadsheet. Okay, and the individual annual retirement column represents the person's ending annual DRIP amount added to the 30% cut Social Security amount. And since this video is about how an average couple's retirement would look like, we simply double the individual amount, and that's how a couple who both started investing $25 a week starting at age 21 would end at an annual retirement income of about $89 grand a year, which is highlighted in green since that's what I was talking about in the thumbnail, though I'll show you why their retirement could have even more income than that in a moment. Then the final column I listed next is what the couple's retirement buying power would be like in today's dollars, adjusted for decades of 3% inflation, without adjusting for Social Security's portion, since it automatically should happen. Moving on to the second row, we see what a $40 weekly investment could look like. In that case, a 21-year-old who invested for 46 years would end up with a portfolio worth $1.8 million, and it would be dripping $47,495 a year. That would take a working couple up to a retirement of $125 grand a year, which is like $54K a year in today's dollars. The third row shows someone who is investing $100 a week could grow their portfolio to an incredible $4.5 million, tripping almost $119 grand a year, taking them to almost $134 grand a year in retirement, or $267 grand a year if they were coupled with someone who is also investing $100 a week. That couple's buying power at retirement would be equivalent to $91 grand a year in today's dollars. Okay, now the next three rows are for people who don't start investing till age 30, instead of 21 like we were just looking at. So a couple investing $25 a week for 37 years would end at a combined retirement amount of about $55 grand a year, or about $38 grand of buying power right now. If they had each been investing $40 a week from the age of 30, then they would end at a combined retirement amount of almost $70 grand a year, or about $44K a year in today's dollars, which is near what today's median retired households pull in at $47,600. And if they had each been investing $100 a week from the age of 30, then they'd end at a combined retirement amount of almost $130 grand a year, which would be about $63K a year in today's dollars. Moving on, the last three rows represent someone who started investing later in life, and in this case I'm talking about starting at the age of 40. That gives them 27 years of working and investing until retirement age of 67. So a couple investing $25 a week for 27 years would end at a combined retirement amount of $39 grand a year, or about $34 grand in today's dollars. If they had been investing $40 a week from the age of 40, then they'd end at a combined retirement amount of almost $45 grand a year, or about $36,600 in today's dollars. And if they had been investing $100 a week from the age of 40, then they'd end at a combined retirement amount of almost $67 grand a year, which would be almost $47 grand in today's money, which is about the same as the median retirement household. Plus remember, half the households pull in less than that in retirement, so if you're one of those people in your 40s that hasn't started investing yet, it's important to realize that you can still start now and improve your financial future. And don't forget, you could always consider moving to Thailand or Costa Rica or somewhere like that, where your money will go a lot further in retirement. But there is another path that could be taken, which is riskier but would also yield more retirement income, and that would be to follow a hybrid model of getting dividends but also selling some of your dividend shares. That's riskier because you wouldn't want to outlive your portfolio if you sold it too fast, and it might suck if you had to sell shares even though you want to leave your entire portfolio for your kids or to charity or whatever. But don't let perfection be the enemy of the good, so let's look at some examples. How about the 40-year-olds who've never invested, but they start investing $40 a week until they retire? We saw that originally they would be making almost $45,000 a year in retirement. Individually, they would each have portfolios of about $269,000, and combined they'd be at $537,000. Let's use that $537,000 as an input into another tool in my spreadsheet product called the Living on a Portfolio Simulator, which models how a dividend portfolio would trend over time if you were selling part of it each year. I won't model taxes in this scenario, as each person's situation is unique. Like some people might be withdrawing from a Roth, others might not have state income taxes, etc. Anyways, if we put $537,000 as a starting portfolio amount into my tool, and instead of them having $45,000 a year in retirement from their portfolios and Social Security, let's say they wanted $100,000 a year. So if $30,000 combined of their retirement came from Social Security, then they'd need another $70,000 a year from their portfolios, thus I'll set the expenses in my tool to $70,000 a year. This estimates that their portfolios would last for 14 years before they went to zero, which is decent. I mean, since they retired at 67, then they'd be making $100,000 a year until age 81, and the median age of death in the US is 74 years old, which means they could even withdraw more if their goal was to end at zero. That's riskier to do, since you don't want to run out of money, but it is an option to consider, along with factoring in each person's unique health realities and life goals and risk tolerances and such into the equation. Now let's do that same exercise with the row 1 people who started investing at age 21 and ended with a retirement income of $89,000 a year, but let's also pretend that they didn't have any Social Security. So each person would have a portfolio of $1.1 million with a combined drip of about $60,000 a year. Let's assume they want to live a lavish lifestyle, spending $300,000 a year in retirement. This tool estimates that their combined portfolios would last for 13 years before they hit zero, taking them to 80 years old, well beyond the normal age of death. Or if they had Social Security, they would last for 17 years, spending a ridiculous amount each year. Not bad considering all they did was invest $25 a week for their careers. Or if it was just one person, he could spend $150,000 a year in retirement with no Social Security and last until his 80s. If I wanted to be more clickbaity, I could have changed my thumbnail to say $25 a week equals $150,000 a year in retirement, but I'd rather understate things. But please leave me a comment telling me what you guess that your retirement annual income will be the first year you retire. Thanks, I really appreciate it. The real takeaway from all this is don't fret if you've not started investing, if you're not investing as much as you'd like, and instead just keep pushing forward, learning, investing, and trying to do a bit better each day. Take responsibility for everything you can and for whatever life throws at you, even bad stuff. That doesn't mean that everything is your fault, it just means take responsibility over it. The word responsibility is just about your ability to respond to something. And in my opinion, it's better to take 100% responsibility in all things, rather than blame others or rather than be a victim. So instead of blaming someone else for what they did to you, be the person who uses their ability to respond in a mature manner, taking 100% responsibility to move forward. Note, I'm not asking you to take the blame, I'm merely saying that you can take the responsibility to deal with things. That same mindset is true for anything that happens to you, including terrible medical issues. Don't waste time blaming bad luck or your genes or whatever, just focus on owning your reality and moving forward the best you can. And with that, I'll end things, and I'd normally do a shout out to my newest Patreon aristocrats and kings, but I'm still all sold out. So instead, I'll recognize and thank my all-star Patreons, i.e. those supporters that have been signed up to my Patreon for over a year and continue to stay on board. Also, I'd like to thank Seeking Alpha who sponsors me. I paid for their premium membership for years before I was sponsored because I valued their articles and associated comments so much, and these days I'd never buy or sell a stock without first reading everything Seeking Alpha had on it. Whatever you do, please hit that thumbs up button, subscribe if you haven't yet, and click that bell notification. And I highly recommend that you join my free Dividend Discord chat server, which has over 10,000 dividend investors on it from 76 countries around the world. Thanks for watching, stay positive, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.